Ladies and gentlemen, AMC stock is up about 2.5% right now, as well as GME up 8.18%. Both of these stocks look like they want to continue their bullish uptrend. Now, let's get into the biggest news stories that are happening so far on the day today and everything you need to know about these names on a short squeeze basis, looking at the Ortex data, the Stocko tracker data, kind of the sentiment that is out there in the marketplace right now, ladies and gentlemen. So let's get into it. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So first and foremost, like I said, AMC up 2.39%, GME up 8.18%. If you try to find out what's happening with these names, you're not seeing too much as far as actual news. Now, one thing that I have heard quite a few times today, though, is possibly another big investor getting in on GME, and that would make sense to why GME is up 8% today and why AMC is following suit with that almost 3% rally. That is all in all a very positive thing. We did get more rumors of this last week as well. It has contributed to this rally that we have seen in really GME starting to spew over to AMC, and the investor that was investing in GME last week was Pulte. I believe his name's John Pulte or George Pulte. Nonetheless, it's acting as a very bullish catalyst today for both of these names. Now, GME is going to be reporting earnings in between June 2nd and June 8th. It does not look like we have a confirmed date as of yet, and that's going to be the next big catalyst that could kind of push all of these names higher. When one tends to run, the rest of them tend to run as well, and I would think this would be no difference. The biggest difference now, though, because there is a difference, is AMC is going to have this court battle that is upcoming. At some point in the near future, you're going to get an update from especially the special mastery, and that is going to be something that could really push around AMC's share price. Whether it's good or bad, I would expect very volatile moves based off of what the court has to say. What we have seen recently, specifically with AMC, is a lot of suppression of AMC. It's not a lot of bearish bets necessarily being placed by institutional investors. It's low volume and a lot of bearish option activity. But the bearish option activity has been focused around that $10 and $13 strike. Those puts are deep in the money. They're almost causing instantaneous hedging of AMC stock. And if we take a look at, again, what's happening today, no surprise here, same thing. So what we're getting today is the $10 puts. They're coming in hot again for July 21st. You're getting a $282,000 order here, a $3.44 million order right here, and a $282,500 order as well. Coming off of last week's option activity, you've seen a $2 million trade, a $4 million trade, a $3.5 million trade. This basically goes on and on. Even parts of last week, you've seen an $8 million trade, a $4.5 million trade. I could keep going here. But what that's doing is suppressing AMC's price action. Any potential upside rally is being diluted by these option orders. So I think that's important to point out, because today AMC is in the green despite this bearish pressure already on the stock. So I do think that is an overall benefit. And what you really want to watch for as well is in after hours. If you do see AMC stock even go higher in after hours, that's a really good sign, because what we've seen recently is AMC stock will be red during the day and in after hours will rally. Because what doesn't trade in after hours? The options. The instrument that is used to essentially synthetically short AMC stock. I think that's really the best way to put it. Instead of hedge funds shorting the stock and causing the short interest to go higher, they're just letting market makers short the stock. And that does not change the short interest of free float, guys. So that's kind of what is happening again today. If we take a look at the Ortex data here, you got $649 million worth of short positions in AMC stock, about 25% short interest of free float. Free float out on loan, 32.45%, 167.55 million shares that are out on loan. Days to cover sitting at 5.4, cost to borrow fees trailing 3 months at about 79% and 100% share utilization. If we look at the live cost to borrow fees, 92.5% for the cost to borrow average, cost to borrow max 109%, cost to borrow minimum 55.4%. Interactive brokers short availability at about 60% cost to borrow fees with 85,000 shares that are currently available to be lent out. So again, cost of borrow fees remaining high, not quite as high as what we've seen in the past, and I think that's just because of the low volume you've seen. Let's be honest here. There has been lower volume, and that's number one why the options, like I said, have been affecting AMC more throughout any given day. That's a likely reason why AMC is not up a similar amount to GME today. You've just seen lower volume as you've got earnings out the way. You're kind of in this weird state of limbo where there's not a big rush to buy the stock. There's also not a big rush to sell the stock or to even short the stock. Hedge funds, they're not going out and loading up on short positions in the typical way. They're using these synthetic short positions, aka using some of those deep in the money puts to force market makers to short AMC stock. On another note though, oh boy, debt ceiling debacle. McCarthy says decisions have to be made at debt ceiling meeting with Biden. This has been the biggest story of the day today. It's back and forth, guys. Like when you read the headlines that are hitting the newswire right now, it's debt ceiling deal is not happening, or we have not gotten a deal. And then he says, oh, there's progress on a deal. It looks optimistic. And then he says this next headline, decisions have to be made. It's a lot of back and forth right now. And the markets really don't expect a default, obviously, to happen. But the closer you get to that, the less spending that you will see, is probably not going to be a good thing for this market. On top of that, you had a lot of Fed speakers that came out today, and most of them were pretty bearish. Even Fed Bullard, which was like the biggest bull in 2022, he's no longer a voting member, so his voice, his opinion doesn't hold as much weight, but he said we probably need 2 more rate hikes. So the markets are expecting a pause at the next 2 meetings. Fed Bullard says we should probably hike rates the next 2 meetings. So way contrary to what we have seen from other Fed speakers as of recently. And then Fed speakers like Fed Kashkari says a June pause on rates wouldn't indicate an end to the hiking cycle. You're kind of getting Fed members pushing back on this whole pause in June. Now, the next June meeting is June 14th. You're going to get CPI coming out June 13th. So they really just want to keep their options open. Now, with this hawkish Fed speak, it would not surprise me if they have the PCE data that we're supposed to get on Friday already. And that's why they're saying this, to try to precondition the markets for the possibility of another rate hike. We get PCE coming Friday. So that's some kind of tinfoil, I guess you could say. They may or may not have the data right now. That would make sense to me why they're talking like this. But on an even crazier note, Fed Jerome Powell's going to be speaking tomorrow at a Democratic conference. It was not scheduled. So that kind of sets off alarm bells in my mind that maybe there's something he wants to get across to markets. I wouldn't go out and bet the farm on this, right? I wouldn't make a huge bet on this at all. But when Powell is unscheduled and not scheduled to speak, and then he all of a sudden comes out for a speech, it raises some alarming, warning bells, okay? So there you have that. The biggest thing of this week, though, I'll continue to say this, is going to be AI. AI has led this rally higher. It will likely lead this market lower. And what you're going to get is NVIDIA earnings Wednesday and after hours, as well as Snowflake. NVIDIA was really the first one and the largest runner out of all of them. NVIDIA, I think their low was like $108. NVIDIA is $315 per share right now, up well over 200% from their lows. Nvidia was kind of the source of the AI hype. If earnings are bad on Wednesday, or if this is simply a buy the rumor, sell the news kind of event because Nvidia has already rallied a lot, it's not going to be good for the broader markets, guys. Zoom will take place as well in after hours today. And then you're going to have stocks like Lowe's tomorrow pre-market, Dick's Sporting Goods, Palo Alto Tuesday after hours, Intuit. I think those could be some interesting names, but really this week is all about the AI, guys. So there you have it. Does not look like the collateral crisis is starting right now, as a lot of, your biggest companies are positive on the day. No real shocker there. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.